that Bitcoin can reach $400,000 in 2021 as a risk-off reserve asset. You can see it on the chart here exactly what they're looking at, and this actually dwarfs other really bullish price predictions that was set. For example, the stock to flow model that says that Bitcoin should reach around 288,000 by 2024. In other news, option traders are targeting $80,000 by May. That's right, $80,000. With Coinbase's highly anticipated direct IPO expected to take place next month, option traders are expecting on Bitcoin to soar to new all-time highs. Option traders are targeting that.
So this one, so Kim.com. Kim.com, he was a internet pioneer, made a lot of different, I think it was on FileShare or Share something, where he was like one of those gurus when the internet really started to really come into light, and it was a file sharing platform. He's been around forever, and he's been a big proponent of cryptocurrency, but not so much crypto, but more recently Bitcoin Cash. He's been talking about Bitcoin Cash for quite some time. And he has a thesis, and it makes a lot of sense. And he says, look, people don't want to pay a ton of money for transactions that are super high and are super slow. So if you're
also to this one over here, and of course also that you're joining our great crypto community here on Discord. So make sure that you use the official link that you find down below here in the video description to join our great Discord community. So big shout out to all the members here, and also a special shout out to Geek Mama. It's her birthday today, so congratulations, happy birthday. I hope that you can celebrate a nice birthday after watching this video. So thank you again very much.
To charge money for your products or things that you give or things that help people. It's a good thing that you charge money. Money is an appreciative value for the time and effort that you put into your things. And my 17 years of investing in the stock market and the pains and sufferings that you'll save by learning the Stock Guru Master course is worth much more than $333. It's worth millions. And again, combined, my students have made more than $1 billion. I've made many multimillionaires and many millionaires. So don't ever value anything that you do, and just the idea that you shouldn't pay for things, or you should. I really want you to change your mindset, everyone, when it comes to money. Be thankful to pay for things. Don't come from a place of I want a discount or I can't afford. Don't stop. Throw those thoughts away. Replace them with I am very thankful to pay top dollar for this thing. I'm paying for quality. I'm paying for something beautiful. I'm glad to pay it, and I'm getting what I'm paying for returned in information, in knowledge, in a car, in a product. Be thankful to pay your bills. Be thankful to give people money. Be thankful that you have to pay for something. Don't come from this mindset of lack, that I can't afford this or something like this, and that I need to hold this small amount of money that I have or big amount and not distribute and not pay for things. That's a mindset of lack. Money is infinite. It's just abundant as air, as abundant as water. They printed $6 trillion of it in the last year. So really have a mindset of abundance, and then you'll see your world change. Your mindset has to be of abundance first internally, and then externally you're going to have a mindset of abundance. And that's why I really recommend also joining our chat room. We have a 24/7 chat room, chat.stockguru.us. In that chat room, there's 16 millionaires. Some of my personal friends, multi-millionaires, are in this chat room. I'm in this chat room, and you'll be able to talk to and experience and kind of learn from millionaires and multi-millionaires in that chat room. There's 130 something members in there, 16 millionaires and 6 multi-millionaires that we know of. So come in and join us. You can see reviews from some of the students, and that's why I really want people to pay for this course. 1, to appreciate my knowledge. 2, to pay for it and really really kind of follow through and do the course and learn the knowledge, and they will do that once they pay this money for the course. I've had tens of thousands of students take this course and learn this knowledge, and I want you to join us as well. We're also going to look at, it's purely going to be technicals on Bitcoin, trying to predict it, but I also have a little surprise. I'm going to try and predict when Bitcoin will hit $1 million, and I have an exact date and year for that target. So watch through to the end to see when I think Bitcoin will be hitting 1 million.
Don't get in on it. They're leaving behind at a top level the biggest revolution that we've seen in the internet and money, and the mix of those two combined. This is actually a revolution in technology and a new way of doing things. So it's not just an investment, it's actually a really broad-reaching thing, and that's Bitcoin plus Ethereum and all the other parts of this digital asset network. But in terms of price, if we look at the previous cycles after they halved the supply of Bitcoin, called the halving cycle, happens every few years and it's predictable and forecastable, the price tends to go up 10, 20, 50x. And it would suggest that the price still has maybe another 400% to go, maybe even more this year, right? There's no asset that looks like this. Sure, you can speculate in options in gaming stocks or whatever it may be, but nothing as a trillion-dollar asset class has this kind of upside. So that's the potential that's there. So even if you think, well, what happens if it falls 50%? So 50% is your downside and your upside is 400%. In a longer term, in a 20-year horizon, yes, it is a threat to the dollar. But, you know, nobody wants their dollar to go up and down 5% a day, which is what Bitcoin does. It's not stable. It's a store of value. It's more like gold right now. And its very existence caused the central banks, like the Federal Reserve, to set up their own versions of digital currencies. So it all starts slotting into this new digital world. So they understand that it's there, that people want to use it, people want to save in it, make investments, but they also want to make sure that it exists as part of the system that is already in place, because they want your taxes, obviously. Look, Bitcoin is one thing, which might be the store of value that might turn to money. But there's a whole world of digital assets out there. And many people watching this have seen everything from these digital pieces of art called non-fungible tokens. One of those sold today for $69 million. That's one thing. There's platforms like Ethereum where people are building the future of the internet of value. These things have real value. There are also other protocols, tokens, platforms that let all of these different things speak to each other. Like you and I don't know what computer you're on. I don't know what internet provider you're on. And we don't care, right? Because it's called interoperability. That whole layer is going to come too. So we're not worrying about Bitcoin. We won't want to invest in it. But if I want to send you money, I don't care how it happens. So there is a huge world of this that's all coming. So, I'm a big fan of Ethereum, and I'm a big fan of a lot of these other projects. Problem is when you go further out on the risk curve, you don't know which ones are going to really survive and get the network effects. But Ethereum clearly has got the network effect. Bitcoin has. This whole space now is 1.7 trillion. If we compare it to the global equity market or global bond market, those are kind of 300 or 400 trillion in size. So you can see how big this can actually get over the next 10, 20 years. Obviously, you don't do things blindly. You have to have a basic understanding of what it is. But none of us understand the technology behind Google. But we own Google shares because we understand where it's going or what it represents as a business. So if you just think in those terms, what does this digital asset space mean? Well, it means a potential future of the internet of money and the internet of value. If you think, yeah, I get that, this could be really huge. Imagine being able to own a share of the internet. Not Google, but the internet. Or a share of the monetary system. That's what this is. That's how democratizing it is. So it's not like you can own a stock and doesn't that make me feel free and liberated and democratized? No, this is owning a stake of the future. It's something much bigger. It's the most democratic investment I think we've ever had. And it's extraordinary because also people might go, but I can't afford to spend $50,000 on Bitcoin. Magic is it goes down to 8 decimal places. So you can put in $10 and you can save $10 every month, or you can save $1,000 every month, or you can buy a whole Bitcoin. So that makes it also democratic, because shares, you can't do that. Fractional shares, they're coming. And you know, some of the platforms like Robinhood have fractional shares, but this by definition is fractional. So it makes it affordable to even the poorest person. Over time, the stock market is reflecting something else, something much more important, which is the rise of central banks and their balance sheets, i.e. the printing of money. Many people talk about, well, it's inflationary, yet CPI doesn't go up a lot,
right?
But people feel poorer. What's going on? Well, the magic is when you move away from using the US dollar as the denominator of something and use the central bank balance sheet where there's all this excessive supply. So if you divide the S&P 500 by the Fed's balance sheet, what happened is, and this feels like it actually is in reality for all of us, the stock market never really recovered from 2008. It trades in a sideways range, little booms, little busts. And what it's basically saying is almost all of the growth in the stock market is the central bank balance sheet. The same applies to gold. It's kind of offsets the central bank balance sheet. The same applies to many other things. The only thing it doesn't apply to is Bitcoin. Bitcoin is the only asset that has protected people from the loss of global purchasing power of fiat currencies that have been printed to excess. So that means that if the central banks continue, the price denominator makes it look like the market's rising. So for people who've seen that the Venezuelan stock market once went up, thousands of %, but once you take it away from being in Venezuelan bolivars and put it in US dollars, it had gone down. It's the same thing. It's what your denominator is. So that is a bubble in central banking and not a bubble in the stock market. There is a short-term bubble in the stock market, and there is the problem. So there is no unwind. So there's their version of the unwind, which is, okay, if we can just keep going and hold this together, then maybe we can get inflation slightly higher, and over time, the value of this debt will disappear. Like somebody's parents who had a mortgage in 1970, the mortgage suddenly looks laughable now because inflation got rid of it. So they're hoping for that, hoping they can raise some taxes and hoping they can keep printing some more money to make the ability to pay all this debt back easier. That's their bet. The world is taking another bet, and that's we can build a parallel financial universe at the same time, and we can choose to opt out. And that's what's going on in the digital asset space, and that's what's going on in Bitcoin. It's a whole parallel financial system with borrowing, lending, clearing, custody, transaction, everything is all built on this new universe. And slowly, people are going to migrate across.